Hello and welcome. You're tuned into today's Bets, the show where we tell you the big stocks that should be on your radar and get you the top trading ideas for the day. PSU banks have been on a tearaway rally and Bank of Baroda has been a top performer over there. SGX is pointing to a flat start as far as today's trading action goes, but Bank of Baroda has clearly been the star as far as the trading action goes, up about 20% in the last 1 month as well. Yesterday it traded for the first time ever as a consolidated entity, the third largest lender in Indian markets. We spoke with P S Jayakumar on how the merger metrics will work going forward now that the three banks have consolidated. Here's what he had to tell us.
What this amalgamation does to us, it gives us both breadth and depth. Breadth through the 9,500 plus branches, and depth because we have a larger and deeper pool of management talent, so which means we can look at different segments of the market and try to get better results from that.
What does the combined entity look like in terms of key numbers? If you could tell the viewers, especially the market viewers, what this new merged entity looks like at this stage.
Well, I think the numbers have been there for some time, in the sense that as of December of the audited balance sheet of December, the total balance sheet, which is the way we measure size, is around 15 lakh crores, which makes us the second largest among the state-owned institutions and the largest among nationalized bank. But that is measured by business reach and size, not necessarily by other indicators. There are many of them. As far as the ratios are concerned, surprisingly, there isn't any real change to them. The capital adequacy ratio, believe it or not, is exactly the same point as it was. That is a combined entity's capital adequacy ratio, QA. The capital adequacy ratio of Bank of Baroda is almost exactly where it is. There's no material, there's no change, maybe a few decimal points here and there. As far as the net NPA numbers are concerned, there is obviously an increase as we balance out between Dena Bank, Vijaya Bank and Bank of Baroda. And the new number, I think, is around 4.8% as opposed to 4.26% of Bank of Baroda. But it's absolute number that matters, and we would have to deal with 30,000 crores of net NPA versus what was 18,000 crores in Bank of Baroda. But if you start to believe, which I do, that we are at the end of the NPA cycle and we are beginning of the recovery cycle, then hopefully we'll have a lot more right backs as we go into the next year. Collectively, these three banks made an operating profit of 13,000 crores as we closed December of 2018. That's for 3 quarters. As we look forward, and this is not a projection or guidance, but I would think, mathematically speaking, something between 18 to 20,000 crores on simple extrapolation should be possible for the next financial year. There should be some opportunity with respect to divestiture. Our estimate is there are about 2,500 crores to 3,000 crores of financial assets which we don't, or in companies where we don't have any material ownership or a desire to take control of these companies. In addition to that, there would be some benefits of divestiture on certain asset categories on account of duplications, etc. So when we put this together and we put in a reasonably more benign net NPA performances, I would think we would tend to move towards a more reasonable level of profitability, which then throws us the organic profits to support growth for here. From a capital adequacy perspective, obviously we got 5,000 crores of capital at this point of time. It translates to about 1.02% growth on a CET1 basis, which is good. In addition to that, we are planning to have the issuance of employee stock purchase plan. We also will have the profits of this financial year flowing into balance sheet for capital adequacy ratio once we get the audit completed. That number between Dena Bank and Vijaya Bank was about 1,400 crores as we concluded September. We're also looking to seeing whether we can issue an 81 instrument to raise capital, which of course requires regulatory and government approval, but we potentially have a window of 1,500 crores for that. So we're trying to get the capital from these sources in, and that would give us enough room for us to continue to grow till for the next financial year, even as the opportunity to raise incremental capital as the balance sheet stabilizes, as the revenues grow, and we can see the amalgamation falling in place comes in. So I would tend to think that the next year financials should continue to see a growth, but a reversion to a higher level of profitability and an ability to demonstrate an organic capital growth to sustain future growth of the company or the institution.
You are number 3 if I take overall SBI, HDFC, and will you grow bigger in the next 10 years I want to go beyond the current merger. If I set a vision, where will you be?
Well, we can set a vision, but the other two banks are fantastic performers and with a huge track record and an enviable set of people and skill sets. So we will certainly compete, we'll certainly do well. But I think the immediate focus for me is a number of other things as well. Now, balance sheet growth is one aspect of it, but one of the things we lag behind these two banks in particular is the way we deal with fee income. That does not require use of capital.
Right.
So, for example, we are underrepresented in government business, we are underrepresented in wealth management, we are underrepresented in FX and trade. So we are underrepresented. So my immediate objective is also to see that, leaving aside the fight on the balance sheet and lending money, how is that we start making significant processes in capturing these sources of income, which have a rich effect on the earnings, increases the profitability of the firm and the return on equity, because on that lies our ability to raise more capital
absolutely,
to fund future growth.
Yeah.
So I think we have many challenges. We have similar size or near similar size and balance sheet as with.
Have you set any target for fee income growth?
So I would first try to see that we tend to mirror our competition, which itself is some distance away.
So that's, Mr. Jayakumar clearly indicating with regards to where BOB is concerned, will be the third largest bank as well in terms of where, if you have to take SBI as well as HDFC into consideration. Yesterday's session, from a peak of almost 137, we did see some cooling off, but managed to end in the positive with gains of almost around 3.5%. But let's welcome in our guest as well. Now we have Ashish